Hello everybody. This video explains accounting basic knowledge and double entry system. There are many benefits of having accounting knowledge. For startup business, owners of business can do the accounting jobs themselves so that they can save costs. For owners of medium-sized business, they have the knowledge to supervise the accounting staff. For investors, they know how to appreciate the financial statements of companies and make wiser investment decisions. For management staff, they can make wiser management strategies. For working class, having accounting knowledge, they can perform accounting jobs and earn income. Some people may confuse about accounting and financial reporting. Actually, they are the same thing. Accounting means financial reporting. Financial reporting means accounting. There are accounting standards, financial reporting standards, to provide guidance on recognition, measurement, and entry of accounting items. Most countries adopt the International Accounting Standards, International Financial Reporting Standards. It may enhance comparability of companies in same industry in a country and enhance comparability of similar industries in different countries. For example, garment trading companies in X country can compare their financial results with each other as they adopt same accounting standards. Toys manufacturing companies in A country can compare the financial results of toys manufacturing companies in B country as they adopt same accounting standards. Now we come to a very important equation, accounting equation. When starting a new business, the money taken out to invest in the company is capital. The capital is used to buy assets or may keep as cash for the company. So assets A equal to capital. The company may need more assets or cash in order to do business. So some more funds are borrowed from other institutions. That means the company incur liabilities in order to have assets B. Assets A plus assets B equal to capital plus liabilities. That means total assets equal to capital plus liabilities, or assets minus liabilities equal to capital. The purpose of accounting is to accumulate and report on financial information about the performance and financial position of companies. Companies prepare financial statements which include balance sheet, which shows the financial position of the company. For example, assets value. Trading and profit and loss account, which shows the financial performance of the company. For example, how much the company has earned. Trading and profit and loss account is same as income statement. Financial statements can be prepared monthly, quarterly, half-yearly, or annually. There are two formats of preparing financial statements: vertical format and horizontal format. Some simple financial statements are illustrated as follows. First, vertical format. This is a vertical format of balance sheet. This is a vertical format of trading and profit and loss account. For vertical trading and profit and loss account, company name on top, trading and profit and loss account for the financial year end a certain date. First, it shows the total sales for that financial year, less cost of goods sold, equal to gross profit. Then it lists all the operating expenses, such as rent and rates, and then calculate a total operating expenses figure. Gross profit minus total operating expenses equal to net profit or net loss for the year. And this figure will be transferred to the capital account. Net profit will increase the capital. Net loss will reduce the capital. Calculation of cost of goods sold is opening stock, add purchases, less unsold stock at year end. Then a cost of goods sold figure can be ascertained. For vertical format of balance sheet, company name on top, balance sheet as at the year end date. Balance sheet shows the assets, liabilities, and capital of the company. Assets may be classified as fixed assets, current assets. It lists all the fixed assets items such as leasehold properties, machinery, and calculate a subtotal. It lists all the current assets items such as stock and calculate a subtotal. Total fixed assets plus total current assets equal to total assets of the company. For liabilities, it lists all the liabilities of the company such as bank loan. Then calculate a total liabilities figure. Total assets minus total liabilities equal to net assets of the company. For capital, it shows the beginning balance, add profit or less loss for the year. Then calculate a closing balance to be carried forward. This capital amount should be equal to total assets minus total liabilities. Some companies may prefer to present current assets first, then followed by fixed assets. Liabilities may be further classified as current liabilities, long-term liabilities. Horizontal format. This is a horizontal format of balance sheet. This is a horizontal format of trading and profit and loss account. For horizontal trading and profit and loss account, company name on top, trading and profit and loss account for the year end a certain date. It looks like a letter T. The first part is the trading account. The second part is the profit and loss account. For trading account, right hand side shows the sales of the company for that financial year. On the left hand side, it shows the cost of goods sold. Sales minus cost of goods sold equal to gross profit. And this gross profit figure will be transferred to the profit and loss account right-hand side. On the left-hand side of the profit and loss account, it lists the operating expenses of the company, such as rent and rates, salary and wages. Then gross profit minus all these operating expenses equal to net profit or net loss for that financial period. And this figure will be transferred to the capital account. Net profit will increase the capital. Net loss will reduce the capital. For horizontal format of balance sheet, it looks like a letter T, company name on top, balance sheet as at the year-end date. On the left-hand side, it shows the assets of the company. Assets may be classified as fixed assets, current assets. It lists all the fixed assets items such as leasehold properties and calculate a subtotal. It lists all the current assets items such as stock and calculate a subtotal. Total fixed assets plus total current assets equal to total assets of the company. On the right-hand side, it shows the liabilities and capital of the company. For liabilities, it lists all the liabilities items such as bank loan and calculate a total liabilities figure. For capital, it shows the beginning balance, at profit or less loss for the year. Then calculate a balance to be carried forward. Total liabilities plus capital should be equal to total assets of the company. Some companies may prefer to present current assets first and then followed by fixed assets. Liabilities may be further classified as current liabilities, long-term liabilities. Nowadays, most people use vertical format for preparing financial statements. This course uses vertical format to explaining financial statements. Ledger accounts. Ledger accounts are used to record transactions. This is a typical T ledger account. It looks like a letter T. Account name on the middle. On the left-hand side is the debit side. On the right-hand side is the credit side. Record transactions on the debit side by entering the date, particulars, and amount. Record transactions on the credit side by entering the date, particulars, and amount. This is a ledger account in columnar form. There are many columns. Account name on top. Record transactions by entering the date, particulars, either debit side or credit side, and then calculate a balance. Companies usually use columnar ledger accounts to record business transactions. However, when explaining how to record business transactions, it is better to use T account as it is easier to understand. Now we come to a very important accounting concept, double entry system. Every business transaction or event to be recorded in at least two accounts. Every debit that is recorded must be matched with a credit with same amount. For a transaction to be recorded with more than two accounts, the amounts entered as debits must be equal to the amounts entered as credits. That means debit total must be equal to credit total. There are 5 golden rules to provide guidance on how to record transactions on ledger accounts. For assets account, such as leasehold property, machinery, addition of assets should be on the debit side. That means reduction of assets should be on the credit side. For liabilities account, such as bank loan, addition of liabilities should be on the credit side. That means reduction of liabilities should be on the debit side. For capital account, addition of capital should be on the credit side. That means reduction of capital, withdrawal of capital should be on the debit side. For income account, such as sales of goods, addition of income should be on the credit side. For costs and expenses account, such as purchases, rent and rates, addition of costs and expenses should be on the debit side. All business transactions and events are recorded in ledger accounts following these golden rules. By referring to these 5 rules can enable you to know how to enter transactions either on debit side or credit side. Example: drawings account. According to golden rules, addition of capital is on the credit side. That means reduction of capital is on the debit side. Drawings mean withdraw amount from the capital, that is, reduce capital. Therefore, entry of drawings is on the debit side. It is recommended that companies should create a drawings account to record any withdrawal of capital, and the capital account record injection of capital from shareholders. Cash bank account is an asset account. Any receipts, that means addition to the cash or bank, should be on the debit side. Any payments, that means reduction to the cash or bank, should be on the credit side. Here are some examples to explain double entry system. Example 1. Mr. Chen invests 10,000 cash to start a business. That means Mr. Chen injects capital to start the business with cash. According to golden rules, addition of assets, that is cash, should be on the debit side. Addition of capital should be on the credit side. So the double entry is debit cash 10,000, credit capital 10,000. This transaction involves 2 ledger accounts. A debit is matched with a credit with same amount. Example 2. Mr. Chen invests 10,000 to start a business with 2,000 cash and 8,000 machinery. That means Mr. Chen injects capital to start the business with cash and machinery. According to golden rule, addition of capital should be on the credit side. Addition of assets, that is the cash and machinery, should be on the debit side. So the double entry is debit cash 2,000, debit machinery 8,000, credit capital 10,000. This transaction involves more than 2 ledger accounts. Amount entered as debit should be equal to amount entered as credit. Example 3. Obtain bank loan 8,000 from HSBC and deposit to bank. That means the company incur liabilities 8,000 and deposit to bank. According to golden rules, addition of liabilities, that is the bank loan, should be on the credit side. Addition of assets, that is the bank, should be on the debit side. So the double entry is debit bank 8,000, credit bank loan 8,000. Example 4. Pay rent 1,000 from bank. Rent is a kind of operating expense. According to golden rule, addition of expenses, that is rent, should be on the debit side. Reduction of assets, that is the bank, should be on the credit side. So the double entry is debit rent expenses 1,000, credit bank 1,000. For sales of goods, there are cash sales and credit sales. Cash sales mean customers pay the sales invoice immediately. Credit sales mean customers will pay the invoice amount at a later date. Example 5. Cash sales of goods 500 and deposit to bank. That means the company receive income from sales of goods and deposit to bank. According to golden rules, addition of income, that is the sales of goods, should be on the credit side. Addition of assets, that is the bank, should be on the debit side. So the double entry is debit bank 500, credit cash sales 500. Example 6. Credit sales of goods 800 to XYZ company. That means customer XYZ company has not settled the sales invoice 800. So a debtors account or accounts receivable account should be created to record these transactions. Debtors are current assets of the company, as debtors owe debt to the company. According to golden rules, addition of income, that is the sales of goods, should be on the credit side. Addition of assets, that is the debtors, should be on the debit side. So the double entry is debit debtors XYZ company 800, credit sales 800. Debtors XYZ company settle the amount 800 by cash after 1 month. That means debtors XYZ company reduce its debt owed to the company and pay by cash. According to golden rule, addition of assets, that is the cash, should be on the debit side. Reduction of assets, that is reduce the amount owed by the debtors to the company, should be on the credit side. So the double entry is debit cash 800, credit debtors XYZ company 800. For purchases of goods, there are cash purchases and credit purchases. Cash purchases mean the company settle the purchase invoice with cash immediately. Credit purchases mean the company will settle the purchase invoice at a later date. Example 7. Purchase $450 goods by cash. Purchases are costs of the company. According to golden rules, addition of costs, that is the purchases, should be on the debit side. Reduction of assets, that is the cash, should be on the credit side. So the double entry is debit cash purchases 450, credit cash 450. Example 8. Credit purchase of goods from WW company 900. That means the company has not settled the supplier WW company's invoice 900. So a creditor's account or accounts payable account should be created to record this transaction. Creditors are current liabilities of the company, as the company owed debt to the creditors. According to golden rules, addition of liabilities, that is the creditor, should be on the credit side. Addition of costs, that is the purchases, should be on the debit side. So the double entry is debit credit purchases 900, credit creditor WW company 900. Pay WW company 900 by bank after 2 months. That means the company reduced its debt owed to WW company and paid by bank. So according to golden rules, reduction of assets, that is the bank, should be on the credit side. Reduction of liabilities, that is the creditor, should be on the debit side. So the double entry is debit creditor WW company 900, credit bank 900. These examples explain double entry system. Also, these examples explain how to record some basic transactions that may occur in all companies, such as injection of capital, borrow money, pay expenses, sales transactions, and purchases transactions. Hope you guys understand basic accounting knowledge and double entry system. Thanks for watching.